Hello, this is Terry. Today is Wednesday, March the 8th, 2023. Daily analysis. Soon I will have live streaming going. I'll be trading Tuesday, Wednesday, and Thursdays live. Monday will be an analysis day. Friday, unemployment day. Don't show up on Fridays. On unemployment day, which would be this Friday. Other Fridays will do analysis, but it's more of a Friday is a market maker stop running day. Any of you who've been trading the currencies for a long time, I'm not talking about just a couple of years, 10, 15 years, no. They all know that the Fridays is a stop running day. So I don't need to be in that mix because I don't know if most of you know that 95% of traders who trade lose money and only 5% make money, and they consider the 95% dumb money. Don't want to be included in that. That's just me. But I'm going to go through the analysis here. Pound dollar is in a buy mode. That's on the 1 hour. If it takes out that candle low, it's wrong. It's going lower. So it has pulled down into it. It could pull down a little bit lower and even give you a better spot, but still that's not bad to get in. The low is 118.01 basically. It's trading at 118.37, so you're risking $35, $36 for a potential move up to in here. And let's see, there's 118.37. That spot is 119.87. So it's 140 pips. So as you see on YouTube, most of you have seen there's a lot of traders who, what I call gunslingers. They got to be in and out of trades. When they get in a trade, they're taking 5, 8, 10 pips. And they're moving their stop loss up to break even. My break even, getting in, I'm going to be taking this trade is right here. That's where my stop loss is. If this thing moves up, I want it to move up 60 to 70 pips. Why 60 to 70? Because when they do move up, chances are that it's the move, the correct move, that has changed direction, is going the other way, and then I can move my stop loss up and continue to follow it. And that right there, just to get to that point, not even back up here at this high, just to this point right there, is 150 pips. If you do one full contract, that's $150. Why would you want to just shoot for, let's say, 10 pips? Because this thing, you see these candles, they can retrace 10 pips easy. So you get in, so you got 10 pips. You move your stop loss to break even where you got in at. It can move 10 pips back, even 15 pips back. Stops you out and the move continues. I'd rather be in knowing that's where my risk is. Just let the thing run. I mean, if you can't afford a $35 loss, you don't need to be trading, period, in a sentence. But that is the first stop I'm going for. And I'm not taking it all out right there. When this thing moves about 70 pips, I'm going to take a quarter of it off. When it moves up to there, I'm taking another quarter of it off. And I continually move the rest of my stops. So the remaining part's going to make money no matter what. All the pressure's off of me. Knowing I've banked money, good money, help pay the bills. So taking that trade, pound dollar, and that's on the 1 hour. We'll look at the 4 hour. Should say about the same thing. Yes, that's the low. We can come back up in here. You get in this trade. I would think this thing is not going to run away, that it could run back up into here during the Asia session, come back down during the Europe session, give you another buy opportunity, and then take off to the upside. So there's a potential good move right there. Plus, we got the unemployment report Friday. Anything tied to the dollar is going to rock. So that's the pound dollar on the 1 hour. Next, the Australian dollar. It is in buy mode as well. See how these are tied to the dollar? It's already come back. Another low risk trade. Let's see what that low is. 65.67, and we're trading at 65.85. That's 18 bucks. That's all you're risking. If you can't afford an $18 loss, again, you don't need to be trading. And the thing is, if you continually get these, you could have 5 losses. All that is $90. So it just depends on what kind of trader you want to be. So that's the Australian dollar. That's a buy. Looking to get into that. Come up into here. Australian dollar. Euro CAD is in sell mode on the 1 hour. See, it's already retraced. Low risk trade. Let's see if you got in right now. The high 145.69 basically. It's trading 145.48. $21 is your risk for a potential where it could come back down into here or even there or even lower. But let's say you got in here at 145.48. Comes down to 144.67. 80 pips, as opposed to you were right. Yay for you. You got 5, 8, 10 pips. Yay. But see, in any of these candles, when you take that, it can retrace that. And it's going to stop you out. And now you got to figure out where to get back in again when on the longer term swing trading, you've already figured that out. You know what to do. So there's those. That's a Euro CAD. That's a sell. Need to get into that one. Euro odd, same things in sell mode. Low risk trade again. No need to go through that. You can pull up your charts on the 1 hour and 4 hour. See the same thing I'm seeing. There it is right there. See, it's already pulled back into it a couple times. And it's still up there again. If it takes these out, guess what? It's going higher. No need to hang around. Just lose the $18 and wait for something else to set up again. There's a trade every day. Every day. So like I said, you're paid to wait, not paid to trade. Euro odd. CAD yen. It's in buy mode. That's a pretty good place. Let's see the low. 99.08 basically. It's trading at 99.42. 36 bucks. It could still pull back down in here a little bit. But I mean, you're only risking $36 right there. And then the 4 hour is in sell mode, but it's already made a pretty good move down. See how it does? If you didn't get in right there, it gave you a second opportunity, which it usually does. It doesn't just boom straight away. Sometimes it does, but more times than not it doesn't. It does this, and that's on a 4 hour. So let's say you got in this sell trade. The high was 186. You got in when it came up to here. The high is 160. $26 risk for where'd we get down? Actually, I'd have got out right here. I wouldn't have got on that. I'd have got out when I touched that. So that is 99.16, and you shorted at 160. So that's 150 pips. So again, I ask you, why would you want to do something 5, 8, 10 pips? Because say, look, all of these candles, these are 4 hours. You move your stop when you get in, it can actually come up, stop you out where you took your 5, 8, 10 pips, and then this is what happens. Why would you want to do that? But there's people, a lot of people that do it. It's because they have the gunslinger mentality. They want to be in and out. I got to make as much money as I can today. Well, they're going to make 10 pips. Let's say they do 3 or 4 trades. Got 10 pips each trade. They got 40 for the 1 day. My 1 day, I'm getting 70 to 100 or more with just one trade. That's it, one trade. Knowing what my risk was. and looking for the potential to where to get out. Now, you don't have to necessarily get out right here. You can take off half profit. I like taking it off at 60, 70 pips and then letting the rest run, and I'll just move my stop down knowing I already got money, and the second half of my trade is going to make money regardless what happens. Regardless. That's the CAD yen. That looks pretty good as well. All of these are setting up for Friday's unemployment report. You can see that. Time to get in these. Back to the CAD yen 1 hour. Odd yen. Here we go again. Buy mode. There's the sell target. Probably where it's going right there, or maybe even up to here. Let's just say this is the low, 90.18. It's trading at 90.41. That's $23. So can you afford a $23 loss if you're wrong and it comes back? Take this out. As opposed, you got a 90.41. That is 91.28. That's 80 pips. There's my first target, is right up in there. Maybe a little bit right before. Taking half off, moving the rest up, moving my stop up. See, my stop loss was going to be there. I can move it up to here, or if it makes even a bigger move, depending on what happens tonight and during Europe, then I can actually move it up even more and lock in. That's on the odd yen 1 hour. They said I don't do anything less than 30 minutes. I don't do 1 minute, 3 minute, 5 minute, 15 minute, none of those. Those are for gunslingers, not for me. I'm a swing trader. So there we go. That's that one, odd yen. Pound odd is in sell mode. Hasn't come up to the yet. Good potential to do that, to run up. 4 hour or 4 hour, it has. So this is where, this used to be your stop. This is now your stop if you were to get in a sell. So the high right there is 180.24. It's trading at 72, so that's a 50 pip stop right there. $50. That's all you're risking for potential to come probably back down to retest. That is my guess. But if it takes that one out, not that one, that one, if it takes that one out, it's going higher. So that's on the 4 hour on the pound odd. So now the pound CAD 1 hour. Oh, nothing really there, even though it has gone up. We'll look at the 4 hour. It's in sell mode, kind of in no man's land here, but it's never really come back up and tested that. So this could move up here. So your buys, the stop loss would be right there if you were buying. And if it comes up into here, then you'd want to be a seller. If it takes that out, then you're wrong. That's where your stop goes, right there. That's on the pound CAD. And CAD pound yen is in buy mode right now. It's already ran up a little bit. Kind of need a retracement back up in here. Get a lower risk trade. It's kind of run up a little bit. Let's see. That low is 161.69. 161. So yeah, that's 80 pip stop, which is still not bad because these things can go that easy, but it's more of a 1-to-1 risk trade. If it pulls back down here, then you're going to have a 1 to a 1.5 to 2. So that one needs to actually pull back some. Now, I could run away. If it does, it does. Doesn't matter. There's too many of these other things to look at. If you miss it, you miss it. No big deal. There's plenty others. Euro, New Zealand. Okay, so let's see. We got a potential sale right there on the 1 hour. The 4 hour showing the same thing. Takes that out, it's going higher. Definitely going way up there. So euros and New Zealand sell. Pound New Zealand, kind of in no man's land. See what the 4 hour shows. Oh, see, it already come up in there, your sell. It could push up into here a little bit for another sell. So there's not really anything to do here right now on that one. That was the pound New Zealand. The New Zealand yen is in buy mode. Oh, there we go. Look at that. Low is 83.62 basically. And you get in right now, it's 78, $16. A $16 risk on a 1 hour. And this could come up and retest that or even take that out. Let's say it just goes to there. You're at 83.79 basically right now. 83.79, that's 21, that's 47 pips to right there if it just goes right there. This has a daily range of 70 to 80 pips every day from the low to the high. So if that was to happen, then it's actually coming back up to here, which is what this high is, 84.47, and we're at 83.79. So it's 21.4. It's almost 70 pips. So that's worth taking, because once it gets up to there, I'm taking half off, moving my stop up, and see what happens. New Zealand yen. The euro yen is in sell mode. Already started. It came up, retested it. There was your stop. It's come down. So that's in sell mode right now. Still got to take out that low. Actually got to take out this low. It's got to take out this low before it's going to go back down into there. If it does, because it's stuck right here right now. That one don't look as good. 1 hour, 30 minute. See how much. Now see, that's kind of in buy mode on the 30 minutes. Already made a pretty good run up. It could come down into here. And you could take a buy right there, low risk, when it comes into there. If it takes that out, you're wrong. Then you know it's from the 4 hour that it's definitely going lower, much lower. And that's the euro yen. So that's all the analysis for today. I hope that you like my channel. You don't have to. I'm not like I'm sure most of you have been on YouTube and you've seen all these guys. Please like the channel. Please subscribe to the channel, because they get paid. They get paid. Once you get so many subscribers, once you get so many likes, you get paid. I'm more about teaching. I'm not into that. I want to be able to teach, because like I said earlier, 95% of traders lose money. 95%. I'm trying to get that 95% lower. So it's just who wants to be included in that, to be where the 5% are the ones that make the money. So I'm teaching you to be in. Of course, to be able to get the, I'm going to be going live stream soon, very soon, Tuesday, Wednesday, and Thursday for most of the days, and Monday on analysis. Don't really trade, but I will look in the afternoon on Mondays for potential trades, because a lot of times that's when they start, is late in the afternoon on Monday. And then Friday, unemployment day, don't trade at all. Why? Because if you've traded any length of time, years I'm talking about, years and years, you know that on an unemployment day, the 1 hour candle, just the 1 hour candle, stays within that range almost all day long. And market makers, the markets manipulate it already. They manipulate it even more by just doing stop running on Fridays. So no need to be in there. The big boys are not trading on Fridays. They've already made their money. They're at the Hamptons on Friday, and the average Joe is sitting in their chair on Friday trying to figure out what to do to make money, when you can do it during the week and you don't have to work on Friday. So like I said, if you like my channel, I'd appreciate it. Subscribe. I'm going to have a lot more where they come up. You can see I do swing trading with low risk trades. That's not for everybody, believe it or not, but hopefully you might be interested in that. Well, that's it for today. I'll be back tomorrow with more analysis, and we'll take a look, see how the trades stood out. Hopefully it'll be my money making for tomorrow. Talk to you guys later.